Hey, what's going on, everybody? It's your boy Sal here, the smallcapmillionaire.com. Visit the website, sign up for the newsletter. Before I get into anything, if you are not a subscriber to this page, please click subscribe now so you can keep abreast of every video I put out. I definitely appreciate it, so go ahead and click subscribe if you can. Today I want to talk about the best short for the upcoming month. There are tons of really bad companies out there. This is one of them. CTBO, Cantabio Pharmaceuticals. This is a horrible, horrible company, and I'm going to hopefully expose them and show you guys why I think this is a terrible company. Hopefully you agree with me. If you don't, please let me know. So let's get into it. So the stock is up today. It's actually off its highs. The highs of the day, I was believe 215. Let's go back and look real quick. Okay, 214. So the high is 214. It's actually headed down in the other direction, but it's been on a slide recently, and so this was kind of a bit of a surprise to see the stock up today. But I wanted to show you other shorters out there, why this is a great short and why I think this is, a trash company. So I'm going to show you by looking into the fundamentals, and I'm going to show you some technicals as well, why this company is bad and why you should, short this stock. So again, let's get into it. So I've got the 10Q already pulled up. This is the amended 10Q. Obviously, this is when everybody has looked, or excuse me, the numbers, the accountants have looked at the numbers and verified that it is in fact accurate. All right, so when there has been a change or some numbers changes, they release an amended version. All right, so this is the amended version. Obviously, you can see the company as of March 31st, $100,000 in cash by the end of the year. This was for March, by the way. So as you can see, early March of 2015, the company basically had nothing. The company basically had nothing. So they've obviously just started getting going. Early middle of last year, whenever, who knows, they probably just put this in the account the month before. Who knew? I mean, but the fact of the matter is the company basically only had at the end of the year about $100,000 in cash. But more importantly, the company is missing a lot of things in this asset department that I'm going to show you and compare CTBO to a reputable pharmaceutical company that is doing a lot of research, that is actually buying intellectual property to create an actual product to bring to market, to make money. And this company just isn't doing that. And I'm going to show you why here. As you can see, of course, like many pharmaceutical companies, no surprise, no revenues. But here's what strikes out to me. There's very little research going on with this company. All right. 2015, $2,300. $2,300 in research. Okay, that's horrible. I mean, they were doing better the year before than they were doing last year. So something is going on here, but whatever it is definitely not, coming up with products to bring to market to make money. They spent a ton more, I mean, thousands of percent more in general and administrative costs. And that's very suspicious to me because that tells me that you're spending a lot more money hiring lawyers, accountants, and so-called professionals to help you bring it all together than to actually create products and do research. And as a pharmaceutical company, you want to see those numbers the other way, or at least be kind of close to each other. We understand there's a lot of expenses that go into, being a publicly traded company, but it shouldn't be that lump-sided, okay? So as we can see here, net income is all, of course, is way down. These companies lose money, so that's the expectation. All right, so overall, overall just looks horrible. The numbers are really bad. I'm not going to spend too much time here. I just basically wanted to show you guys, that the company really, for the most part, isn't legit. You see here, any other things that strike out to me, I'll let you guys know. All right, and see, again, current assets consist entirely of cash on hand. That's not good. That is not a good thing when a company like that, entire assets are literally in cash. And I'm going to show you why that probably is, because that's not a good thing. Where's capital expenditures on your building? Where's capital, where are the chairs, the computers, the monitors, all those things that, we consider assets. This company has none. And I'm going to show you why. So when we scroll up here to the companies, first page of the 10Q amended, you see an address here. And I always, have said this in other videos, make sure you Google that address. And when you Google it, what pops up? Oh, look at this. All right. Reserve your virtual address at 22 blah, 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 East Shore Bay Road in Palo Alto. This is basically a business, a mailbox, guys. This is a mailbox. This is a publicly traded company. All right. A publicly traded company with a market value of almost $52 million running out of a virtual mailbox location for $79 a month. So, you know, you've got to be able as an investor to spot these things, these things. This is a great short. This is a great short. Uh, so I'm all over it. And as you guys can see, I mean, it's a mailbox. They're not, running anything. There's nothing going on here. All right. So if there is something going on and I'm missing it, please let me know. But for the most part, from what I see here, and again, you can kind of tell by how small these, filings are too. I'm going to show you a real company that's doing real things. Uh, but for the most part, this company is not doing anything but selling stock. All right. So let's go to a legitimate company that's trading nowhere near where this company is, but this other pharmaceutical research company is doing what it takes to eventually become a successful company. Their ticker is called IMUC, Immunocellular Therapeutics, and they're a company that generates or is trying to create a cancer drug to, help cure the disease. The company right now is trading less than a quarter, has consistent volume, not much, but, the company is trading within a really nice price target of about 27 to about 22 a share. So investors, understand where it's at. It is trading for what it's worth. But here's the thing. The current market values is almost half of the company that I just showed you has practically no operations. And this company does. So let's go ahead and open. Here's the 10Q that was posted just this past month in May. Obviously, when you take the address here, let's take the address. You're in Chrome, so we can search for it. All right, so let's get that to pop up here. So obviously, we don't see any mailbox things popping up. Okay, we don't see any mailbox things, and it goes straight to the office of the company, Immunocellular. Here's the office of the company. Here's email addresses for inquiries. Here's a phone number if you'd like to answer any questions. So we know that they're legit on that front. So let's keep going here. All right, look at the filing. Boom. So here's the, condensed financial statements here. And here's the thing that you look under assets, and that's really what you want to look for. Company's got significant amount of cash on hand, all right? Supplies for clinical trials. Over $1 million in supply in cash for supplies for clinical trials. This company is actually doing something, all right? So property and equipment, they've got their own building. They've got their own building, all right? They've got their own building. All right, so this is a company that has things together, unlike the other company, all right? And again, we're talking about a company that is trading at half the value of the other one I just showed you, and this one has operations, okay? This one has significant operations. Obviously, no revenues. We understand that these companies don't have a much, they're not bringing in any product because they're trying to create their product. Here's, again, a very important expense. When you're talking about legitimate pharmaceutical companies, I want to know that the cost of research is going up. I don't want to see a decline in research costs. I want to see research going up. As trials become more complicated, you get more people involved in these trials, you become more involved with more reputable organizations and universities, your cost in the quality of research is going to go up. So as we can see here, almost 100% change from year on year in the cost of research. So I like seeing that. I like seeing that. That does not fear me, and that doesn't scare me at all. Net loss, of course, for the year. They're doing their research, but you read about the trials they're putting together. You read about the intellectual property they have uh, under ownership. They talk about the money that they're getting from reputable financial sources in order to continue to finance their businesses. And again, they're trading at 24 cents a share, all right, at a market value significantly smaller than, over 50% smaller than the company that I showed you earlier. You know, the shady company, CTBO, trading at $52 million in market value right now with no operations, no ongoing research, no, don't even have a building. They have a mailbox. They've got a mailbox, okay? A mailbox. And here we have this other company trading at nearly half of their market value with an actual building, with actual research. All right, so we've got two different companies on two different planes. That's why I think CTBO is a great short. It's your boy Sal, the small cap millionaire. Hey, I'm short this company. I don't, hide that from anyone. That's why I'm bringing it to your attention. I hope you guys join me as well. I think 30 days, 60 days from now, we're going to be proven right on this market. So it's your boy Sal. Hey, take care, everyone. Have a good night.